Good morning. This is Marco Mazzocco with Common Sense Research, and I wanted to go over some earnings, unemployment claims, and some technical analysis this morning. So far with earnings season having just gotten started, what we've seen has actually been pretty good, especially in regards to the banks. And what we've gotten out of banks has been that their credit metrics have actually come in surprisingly strong, meaning that the consumer has been able to manage their debt much better than what was expected throughout the shutdown so far. And if that continues going forward, that could definitely be a tailwind for improved bank earnings and the market overall going forward. Next up, we have unemployment claims. The report that we got yesterday was mixed to a little bit on the weak side. And I say that because initial claims came in at around 870,000, which was still a very high print, but that was offset by a nice drop in continuing claims. Unfortunately, at this point in the reopening, when we see initial claims up at this level, it's much more probable that these job losses are permanent in nature, and that obviously is a significant problem. And as we look at this chart, this is something that I've been tweeting out for a couple months now, and what we'd like to see here would be both data series moving into the green. And so as you can see, continuing claims are dropping, moving further into the green, but unfortunately initial claim series has actually ticked back up. So we want to keep an eye on this. Now, what's great about unemployment claims is that this is hard data, and it's also near real-time data, comes out every week, as opposed to the payroll report, which is survey-based. It's a statistical model that we know swings wildly from month to month, and we can't get the most accurate picture from that. Whereas in this specific situation that we're in with the pandemic, we really want to be focused on hard data, what's really happening on the ground with actual people filing for unemployment claims. And so that's what this weekly report gets us. Unfortunately, 28 million people were claiming benefits about 2 months ago, 3 months ago, and now that's down to 25 million, which is very positive, but it's still an incredibly high number. So again, this is something that we want to keep a good eye on going forward. Next up, we're going to take a look at some technical analysis today, and let me just go to this chart. And so what I have set up here is a volume profile chart for the 60-minute time period on the E-mini S&P 500 E-mini futures. And so what I've highlighted are a few significant sell-offs where we saw the indiscriminate bid come in and take the market back up. And what I mean by indiscriminate bid, I'm referring to the large money managers who are managing various retirement funds and are essentially indiscriminate to price, and they have a mandate to buy stocks, so they come into the market and they have to get trades done. And so oftentimes, in the absence of any type of significant news, or when there is a significant sell-off, there is that bid there to help stabilize the market because these managers have a mandate to buy stock, and so that's why they're coming in. That said, I highlighted the sell-off that we got from last Tuesday, which was when Trump decided to call off stimulus talks. And what we saw was market drop down significantly to a point of control that I've highlighted with the arrow on the left. And with the arrow on the left and then the two circles to the right of them were also, two high volume areas where the market drifted down to and held at that point of control. And what the market is saying at that point is most investors found value at that price level. Again, the point of control is just simply the price point at which the most volume has traded, and can act as a significant level of resistance or support. And then over on the right, we just saw a recent sell-off come down to another point of control as highlighted by the arrow. And this is a great way just to see the market trading in these ranges where what happens is we get a sell-off kicked off by a negative headline like Trump saying he's calling off stimulus talks, and then the market simply trades down to a significant technical level, and then the indiscriminate bid, those major institutional accounts come in and take the market right back up. So it's almost a stairs or an elevator down situation and the stairs back up, but it seems to keep happening. So this is just something that I like to keep an eye on. Again, this is called the volume profile. So I hope everyone has a good day, and we will pick up with this next time. Thanks. Bye.